Whether it's a sports car, you're excited to rev up for a nice weekend drive, or a safe minivan filled with entertainment features for your children. Cars are everywhere and car prices are blurry for most of the customers since there is no clear details on behind of each additional fee which is requested by dealers. Join me today in this video for deep dive into the car loan situation and how it will be a nightmare for customers. There are more than 275 million vehicles on the road in the United States. People, they equate cars with freedom. There is this way in which it gives us an ability to explore and see and expand our lives. But in recent years, owning a car has gotten expensive, really expensive. More than 100 million Americans have an auto loan, and auto loan debt in the U.S. is currently at $1.5 trillion, a record high. Outside of purchasing your first home, a new car or an auto is the second largest purchase for most people. Given the transaction prices and vehicle prices today, financing is required to buy these vehicles. In 2023, the average monthly auto loan payment for a new vehicle is $725, up from $650 in 2022. The average monthly payment for a used vehicle is $516 in 2023, up 2% from the prior year. Meanwhile, consumers don't typically cast their car buying experience in a positive light. For years, complaints and lawsuits have been popping up left and right against lenders for alleged discriminatory and illegal practices. So what's happening in the auto loan industry, and what can consumers do to make sure they are protected? But first, let's understand how auto loans work. Just like any other loan, an auto loan is a lump sum of money you're given to purchase a car, money you're borrowing and have to pay back over time. Once you've been approved for a loan, often including a down payment, you can drive your new or used car out of the lot, but it's only yours as long as you make monthly payments. With interest, of course. Take 32-year-old Claudia, for example. In 2019, she bought a new car for just more than $48,000. She put down about $10,000, locked in a 3.89% interest rate for a 72-month term, and now makes monthly payments of about $590. By the time the loan is paid off, she'll have paid nearly $5,000 in interest. And then there's a caveat. Until you fully pay back the loan, the lender holds the title and can repossess the car at any time if you fall behind on your payments. There are direct and indirect lenders. A direct lender would be your local bank, credit union, or an online lender. Once you're approved for a loan through a direct lender, you can then head to the dealership and shop around for your car just like a cash buyer would ask for indirect. That's when you go to a dealer and they provide you with financing options as you're buying a car. Now, regardless of if you're choosing a new or used car or direct or indirect lending, one of the most important factors that will determine the interest rate and loan terms you're offered is how confident the lender is in your ability to pay back that loan. They look at your assets, liabilities, income, expenses, and most importantly, your credit score. Market changes. More than half of auto financing is by non-bank finance companies, such as the financing arms of automakers. These lenders typically rely on short-term funding markets for their own financing. So, with volatile markets, especially the case of short-term funding markets drying up during the global financial crisis, the past couple of decades have kept auto lenders on their toes, to say the least. In the first quarter of 2023, the average interest rate for a loan on a new vehicle reached 6.58%, up from 4.1% in 2022. That's an about 15-year high. Average car prices are also at a high. That's partly due to supply chain shortages, higher demand, and inflation. That also means Americans take on larger loans at a higher interest rate. In the past 10 years, outstanding loan debt has doubled. And auto loan debt in the U.S. is at a record high. Younger Americans are also more in trouble than they've ever been in. In 2020, $20 billion, and Gen Z and millennial debt had fallen into serious delinquencies. Alleged predatory lending. Being priced out of the market is just one reason. Americans have a bone to pick with the auto loan industry. Besides the notoriously unpleasant car buying experience, there's also been more complaints and lawsuits related to alleged discriminatory and illegal practices by auto lenders than we have time to get into. The consumer never sees how much the finance company has said is the minimum interest rate and loan term that they will accept. Let's say, for example, Toyota Finance says that they want the minimum interest rate to be 7%. The dealer can bump it up to 9%, and the consumer never knows about that transaction. It violates all of our norms about fairness and about the way markets work. It's a convenience the dealer is providing, offering a service by arranging financing. That markup becomes profit for the dealer and is sometimes shared with the lender. Many financial institutions do put limits on how much of a premium a dealer can have adds to the rate that we offer. Putting limits ensures consistency of experience across a variety of distributors. Generally, auto finance companies does not provide to customer with what its current caps are. Caps on markups vary based on state and lender, but are typically around 2.5 percentage points. Lack of transparency is just one, but a common reason some consumers feel they're being treated unfairly. Consumer protection. For the first time in more than a decade, in 2022, the FTC proposed a rule addressing unfair and deceptive financing practices by auto dealers. Their proposed measures include banning bait and switch claims, fraudulent junk fees, surprise junk fees, and requiring full upfront disclosure of costs and conditions. But in July 2023, the U.S. House Appropriations Committee backed a government spending bill containing language that blocks the FTC from implementing its proposed new rules. So what does that mean for consumers? It means new legislation is probably not around the corner. In the meantime, consumer advocates say more programs are needed to protect Americans buying cars, and that increasing transparency is key. Until we see changes in the industry, Americans need to look out for themselves. Before getting an auto loan, experts recommend shopping around, check your credit score, get pre-approved online, go to your local credit union and bank and find out what types of deals you might be able to get before signing anything. In 2020, Toyota launched SmartPath, a digital retail tool that lets customers shop for cars and apply for financing online. This concept of living room to show rose so that when customers and guests are online, researching what kind of vehicle they want, they can have a similar and transparent process. If you have the means, drive to a second, third, or maybe fourth dealer to compare rates and terms, and stay away from buy here, pay here dealers. They typically offer the highest interest rates, sometimes up to 20%. Do your research, ask questions, and don't give up. Even if it's been a long, exhausting, and mentally draining day. We all know the feeling of not wanting to see one more number, but don't let that push you to sign on the dotted line. If you're not ready, tell the dealer you need more time and you'll come back. Finally, vote. There are tremendous problems and tremendous solutions. And those solutions are only going to happen if the politicians who are making decisions about federal law in particular are willing to take consumers into account. Until we can get politicians to commit to protecting consumers, people are not going to have solutions. Thank you for joining us on this journey into the Car Nerd for detailed explanation of car loan situation in entire United States. If you enjoyed this video, make sure to like, comment, and subscribe to our channel for more captivating content. Stay tuned for our next exploration into the extraordinary realm of cars. Until then, drive with passion and embrace the thrill of the road.